As you can see, this is a decisive, clear, absolutely defiant statement about what one lion is saying to the other. Protecting my turf, I'm going to do what I need to do to protect my turf, and I'm making it clear that I'm going to be protecting my turf in an aggressive way. Unequivocal. This is the characteristics of the winner in today's marketplace. It is one law firm against another. We're all trying to gain share, and those who are decisive, those who are clear, and those who act in an aggressive manner are going to fare better than those that don't. Now, this cute little kitty and these ducks probably do a better job of describing the current state of the competition in the legal world. Most law firms are looking at each other, they're sizing each other up, they're trying to understand, they're looking, they're maybe developing a strategy. Whether or not you're the kitty, whether or not you're the duck, doesn't really matter. They're not acting, they're not protecting their turf. Everyone is coexisting, everyone's enjoying the sunshine, and while that would be a tremendous place to be in our lives in business and in the legal world, we are not allowed to do that in this competitive environment. This will set the framework for what we're going to speak about today. As we look and close out 2014, move out to 2015, we find that still the only way to grow is at someone else's expense. We still haven't seen the dynamics that come in and allow us to grab incremental new dollars that enable us to grow without taking that share from somebody else. Now, I want to go over this in a little bit of detail because I think the history is going to set the stage for where we're headed as an industry and what the opportunities may be despite this. So if we go all the way back to 2001, law firms were capturing about 42% of the total spending on legal services. This individual column represents the average spending, the total going in a typical Fortune 1000 company. So you're looking at about $24.3 million. That dark blue segment is the average dollars that are being spent internally. Internal resources, whether they be people, whether they be research, and the orange is the average amount going to outside counsel. So this is our baseline. As we move forward, we can see this slowly but very steadily increasing with nice gains. You can see that gray part especially really picking up speed all the way up to the 2008 timeframe. By the time we roll forward to 2008, what we've got is a doubling of spending with law firms, which again is that orange portion of the bar. So what's happened is the total legal budget has gone up almost doubled. It's about $1 million short of doubling. The amount going to outside counsel is virtually doubled, going from $10.5 million to $20.8 million. So life was very, very good. The only question is, those of you who will remember, is how quickly can we grow and how quickly can we raise our rates? And things were looking pretty good until the fourth quarter of 2008, which was a precursor for what was supposed to happen and did happen in 2009. This is when the market just fundamentally collapsed. Everything we knew about it changed. You saw that $20.5 million in 2008 being spent on outside counsel go down to $18.5 million. So that's $3 million per company that disappeared for outside counsel. You can see that that roughly $12 million on internal spending went down to 9.6. So if you total that up, $6 million per company disappeared from the marketplace. Clearly, this was the quarter, this was the year where more law firms reported the worst results, the most difficult results that they've often ever had to report to their partners and experienced as a firm. But this defined the new marketplace of how we would move forward and said, we need to change our strategies, we need to change our approaches. So we move forward from 2009, and you can see not much movement from 2009 to 2010 in the outside counsel spending, which again is the dark gray. And then you see it staying roughly the same. Then in 2012, you see a little bit of a sign of recovery, but it's a little bit interesting because you see a slight increase in the outside counsel spending, which is the orange segment on the bottom, but that dark blue segment, take a look at that. All of a sudden, that's up to $12.9 million average per Fortune 1000 company. So we've seen that go up from 9.6 in 2009 to 12.9, so about $3.3 million, while outside counsel spending has gone up by roughly, $1 million plus. So we start to see this growth and this change where it's looking a little bit more like it, did in 2001 or 2002 than it did in 2008. But this trend bears watching because as we get into 2013 and we get into 2014, we still see that the orange segment of the outside counsel spending is still only about $20 million per company versus the 19.8. But you still see, if you look at the blue, that that's 14.6. Okay, so you've gone from 12.9, we'll call that $13 million. You had a $1.6 million jump, and you can see this continual growth in inside counsel spending, what companies are spending internally, while the world of outside counsel spending, by and large, has been flat. The overall growth between 2009 and 2014 is somewhere right around 1.8% versus that much more robust growth internally. This is one of many challenges that law firms are facing, but the overall arching trend of corporate counsel all of a sudden becoming much more comfortable bringing work in-house has more than an impact on just spending. It has an impact on expectations and how law firms and how clients want to interact with their law firms. And this really has become the second most important trend as we see it, as we assess where we are in the state of the industry. If you look, internal legal departments are now better equipped to handle the work in-house and manage law firms than they ever were. Now, why do we say this? First, we look at the corporate counsel and what's happening. What happened in 2009 is a number of law firms really de-equitized. They laid off associates and made all kinds of right-sizing decisions about their staff. What this did is it made these attorneys, these generally speaking, highly qualified, highly experienced individuals available to the corporate counsel world, where previously the benefits of being in a law firm were you would stay at a law firm. Now all of a sudden that changed. You found a deep interest on the part of former partners and on the part of corporate counsel to start bringing in these partners, these associates in some cases, but not just bringing them in, really investing in them and using them as a basis to reshape and build and reshape how clients think about the legal function. The result of this is if you look from 2005 to 2014, in aggregate, $28 million was being spent internally by corporate legal departments. That number jumped up by $12 billion, almost 60% increase in 2014. So why are corporate counsel building the larger, more capable in-house teams? And the reasons really come down to a couple things. They've gotten pretty skilled at hiring partners from law firms. This has been a steady source of building their staff, and they're finding more and more of the talent out there is interested in making the transition from law firm to corporate counsel. We're starting to see a trend of managing partners moving into general counsel slots. There's at least 7, 8 of the top 15 companies in the world where a managing partner has come in and either become the general counsel or a key advisor to the general counsel as a non-employee of a law firm. This is setting up a construct where you've now moved talent into place in corporate counsel's office who are quite comfortable managing multiple cases, managing the issues that come up with an ongoing stream of matters, and really starting to operate as mini law firms within the corporate counsel department. This not only gives them better efficiency that they've had in the past, but they have a lot more confidence in handling the work in-house. Many of the people being brought in-house have experience in litigation or have experience that previously corporate counsel didn't get because they had not been with law firms or not been with law firms for a long time or the right role. So now you've got all this experience building up within the corporate counsel department, and they are now looking for more and different things from their law firms as a result. First, because they spent time in law firms, they understand what law firms are about. They feel like they are better qualified to manage and ask questions about fees, negotiate alternative fees, and really drive expectations. They also know the metrics and which buttons to push to ensure that they get closer to what it is they want. Now, the last issue is, even though they have all this experience, what is new to them is the constant and changing and unrelenting pressure. It used to be for billable hours when they were with a law firm, but now that they're inside a company, it's to deliver more and more business value and faster business value. CEOs don't want to call up, as one general counsel said to me, when my CEO calls, I don't have the luxury of saying, I will get back to you next week. He will usually wait on the phone or expect a call back within 5 minutes. So they, that is the new corporate counsel, is looking for a better understanding from their law firms of what they're facing, what questions are likely to be asked, what they're going to be dealing with, so that the law firms can help them respond and answer the business-oriented as well as the legal-oriented questions. This is a much bigger issue than it has been in the past, and our research shows that, in fact, it is going to be an even bigger issue in 2015 as we unfold, and we'll be talking more about that at a future date. But this is really driving the move of the dollars in-house, is you've got former partners, former associates who are comfortable managing and actually sometimes now performing the work in-house. We see more and more in-house companies, especially the larger companies, taking smaller acquisitions, some complex litigation, IP work, and bringing it in-house because they feel like they have better control, they feel like they have better understanding, and can better respond to the needs of the business units. So the more law firms can figure out how to better respond to the business units and understand the business, the better they will be to be able to help back offload some of this work to law firms, which, as you can see, if you take the difference between what was spent in 2005 and 2014, if you take one of the largest law firms in the world, that's an equivalent of taking 6 or 7, maybe more law firms completely out of the marketplace. And this is the stakes that we're up against as we're trying to figure out how to meet the new demands of corporate counsel. Now, as they're managing their law firms, we're finding in 2015 fewer opportunities to land on a client's law firm roster, but more opportunities per client. Corporate counsel continue to work with the rosters they have and change them. They've still got the 2 primary and 7 secondary firms. The 2 primary firms, really that number has not changed, even though the individual law firms playing that primary role have changed. The 7 secondaries all have substantive work. Every single one of them has the ear of the client, the general counsel, or an associate counsel in a substantive way, and they all would like to be primary. So you've got 27 firms that are out there doing jurisdiction-specific work, that are doing very technical work. They really don't have access to the decision makers. So if you really want to be generous, you could say we only have to worry about being a primary or secondary firm and look at them as competition. If you're a primary or a secondary firm, we're competing with 8 other firms every single day. And the reason this is so important is because we hear and we read all these comments that say the competition is tough, the market's tough. This brings it right down to an individual client level. Every day at your client is dealing with 8 other firms and evaluating what you're doing. Now, when we're in pitch mode, when we have a proposal, the adrenaline level goes up and we're saying to ourselves, I'm not going to let that firm beat me. I'm not going to let my former law school buddy beat me, whatever the reason is, but our adrenaline is running high, and we're going to deliver the best proposal we can. Unfortunately, when we're doing day-to-day work, there are some partners, but not all, who say, you know, this is going to be the most compelling piece of work my client sees this week. It's going to stop them in their tracks, and they're going to be impressed, and it's going to make the other 8 law firms I compete with look like they're pikers. That's the next level of competition. How do we every single day, every single week, make clients believe we are absolutely best and have thought about them, and we're understanding their business needs, and that we are delivering the absolute best client service? Those will be the ones that get the business and get remembered. Now, if we look back from 2012 and come up through 2014, as I indicated before, the number of primary law firms hasn't changed, but the number of secondary law firms has slowly moved down. So you can see in 2012, we went from roughly 10 or 11 secondaries down to 7, and the other firms, all the way over here on the right, have really seen a drop. A total of 18 law firms have been dropped from the roster since 2012. That's only, you know, if you want to be generous, 3 years. So the challenge is, how do we deliver the best client service? How do we deliver the most compelling insights against those 8 other firms, that is the 2 primary, the 7 secondary, which is 9, and of course you, which you're competing with the 8 other firms to make up the total of the 9 core firms. How do we deliver that every single day? And as long as we can do that, we will be part of this bigger pie, because clients are spending the same amount of money with fewer firms, so we know we've got an opportunity to get more fees from an individual client. So this is where strategy comes in. How do we become focused? What do? How do we get that laser-like lock so that we can dedicate our resources and our concentration to win? Because in the past, most law firms have taken an approach which was very scattered. They would do 10, 12, 15 different tactics, strategies, and approaches to clients, but it is going to be those with the laser focus, those that really try it on a client-by-client basis, that will end up with the business. Now let's look at growth. There's 2 essential elements to organic growth, that is generating growth from within the firm. We know that there's laterals, we know that there's mergers, but even with laterals and mergers, if you can't convert that to organic growth, then the laterals, the mergers become less than productive. So there's 2 aspects to this. First, we've got the market opportunities. Those are the things that are out there. Those are new emerging trends, new emerging opportunities, whether they be a result of regulations, whether they be a result of changing business conditions, whether they be a result of product developments that have created industries that perhaps didn't exist before. Then you've got client opportunities, and those client opportunities are the individual clients that we all service every single day. They have needs that are changing, they have needs that are evolving. If this is in sync, if you're looking strategically, you'll go up to the market opportunities and you'll see the emerging practice areas, you'll see the occasional boom practice that is just growing like a weed. You'll find industries that are growing faster than others. But if you mesh that with the clients, if you start with your clients and are able to see what the market is demanding through your clients, you will be extraordinarily successful, because your clients are each a participant in the marketplace. And if you can see and offer the market-based services that are coming through the market and growing through your clients, that will enable you to capture more work, help you protect your client base. But if you're not delivering and outperforming your competitors every single day, then we've got other issues no matter how big your understanding is. So in order to start, we'll start with the market, because the market ultimately will influence how your clients are going to demand and ask for services, and we'll take a look at where the different practices are flowing, how they're changing, and what kind of opportunities they're presenting for us. So first, as we look at the market opportunities, there's one underlying trend that just doesn't go away and in fact keep reinforcing itself, which is creating one of the, we think, more missed opportunities in the market, and that is the role of what is now being called foreign direct investment. That is companies based outside the United States investing in assets, whether they be manufacturing facilities, companies, technologies, distribution, and are operating on a bigger and larger scale in the U.S. and trying to develop the U.S. marketplace. As you can see from 2010, going all the way up to 2014, it went from being 31% of the market to being 40% of the market. And if the trends hold, and it looks like they may be accelerating, right now it looks like that spending, that new spending, may exceed the spending from the typical domestic-based U.S. corporation. Now, if we were to move the conversation to Europe or Asia or even South America, what you would find is this chart would apply, but of course what we would be saying is the U.S. companies, the Fortune 1000, are investing heavily outside the United States. So you've got a lot of cross-globalization going on in terms of spending. But if I'm sitting here in the United States, the opportunity here is really extraordinary because it's one of the few places where, even though overall spending is flat, this segment is growing while another one is shrinking. So if we can pick up the growing increase and grab that trend, then we will have a slightly easier time than others who are fighting to take share from each other. This type of trend, this market, will probably last at least a couple of years, so certainly worth investing in, and it's got legs and it's got history. What's also interesting is that 75% of the hires made by these global companies making foreign direct investments, 75% of the hires are outside of the AmLaw 50. In fact, many of them are regional. They will go in and look specifically for law firms in the regions of the country that they want to expand and develop in, and will also make many of the decisions on a local basis as to who to hire. So sometimes the overall trend masks the individual opportunities, and this is what we're trying to talk about when we say marrying the market opportunities with the client opportunities, because this will tell us directionally where the clients are, and then developing the individual clients based on the overall market need would paint a compelling story here. Now, this is BTI's, I believe this is our 15th map of where the market is headed and why, based on the major practices that are out there. So you can see as we do this, across the bottom axis we have what we call relative rates. The center line running up and down the chart, it'll be what we would call the market rate. The horizontal line is the average growth rate of the marketplace, and you've got growth prospects on the left axis. So as we plot each individual market, the circle size represents the amount of outside counsel spending in that arena. Anything above the line is getting new incremental dollars. Anything below the line is shrinking and going to be more difficult. Anything to the right of that center line running up and down the chart is going to feel a little bit less price pressure. Anything to the left is going to feel more price pressure. So you can immediately look at this and say, where do I want to invest to grow? Where do I need to invest to protect and grow? And kind of shapes the dynamics of how we want to target, allocate, and define the strategies for each of these practice areas. Now, time precludes us from getting into each of the individual practice areas today, but there are a few that I think bear pointing out. First, I'm going to start with cybersecurity in the upper right. This is cybersecurity, data privacy, data breaches, all the things that we're reading about on a regular basis. This is the closest thing that we now have to what we call a boom practice. This is growing at about 8 or 9% a year, and in fact has potential to grow at an even faster rate. This market is really kind of interesting because what you've got is when you think about this market, you've got somewhere between 4 and 6 real mega cases. These are large cases with tremendous exposure. They're mostly in the newspaper, but not every single one of them is. And these require massive sets of resources to manage and deal with. Behind that, you've probably got somewhere between 60 and 80 substantive issues. They're not the mega cases. They may not even make the national headlines, maybe making local headlines, but these will not have the scale of the mega cases, but have substantive matters. They are substantial fees and substantial issues and exposures for clients. Then you've got the whole rest of the market, which is either small issues, counseling, planning, risk assessment, compliance. So this market really has a number of key attributes which would suggest that if I'm targeting this market, I want to figure out exactly where I want to play, how I'm going to position myself for that, and what it means for the clients that I go after, and what it means for my existing client base. If I were looking at this marketplace and I'm sitting inside a law firm, I would immediately want to say, well, listen, which one of my clients face the mega exposures, which ones are likely to have a second-tier exposure, and which ones need the counseling. And we also need to be prepared to give the counseling, because I know there's a number of law firms that thinks the counseling work is just too small and not big enough to justify the time. But the counseling work is going to put you there if and when that big data breach comes. The market has crossed $1 billion in spending and is still heading up, so it's a very attractive marketplace. One of the big challenges we're hearing from law firms is, where do I get the people to do this? Everyone is looking for laterals and other attorneys that they could bring on board, looking at other major firms, mid-sized firms, boutiques. But right now, the market for laterals and cybersecurity is really quite robust. If you move to the left, you'll see media and technology, which is also a new practice this year. This is kind of the whole world of content and digital marketing, digital rights, and how that all plays out. Right now, it's about a $560 to $600 million market. Mostly is more towards counseling than it is raw litigation or matters, or there's some compliance in there as well. But this, too, like cybersecurity, is likely to emerge into larger matters, probably on the same order as cybersecurity, where you'll have, somewhere in the, 8 to 10 to 12 larger matters, some more substantive matters, and then a lot of counseling. But we're seeing a lot of growth and interest as companies all try to figure out what the boundaries are between where their media technology, content, advertising all kind of converge in one place, and want to make sure they're getting the protections they want, that no one's infringing on what they're doing, and not violating anything that would somehow stay in their path. In the more traditional practices, I would look at M&A, which is particularly robust with private companies. You can tie that back directly to the activities of the foreign-owned companies operating in the United States. Very active, as well as the technology companies based in the United States are very active with private companies. So that market is relatively strong. IP litigation still has some legs to it, but not as strong as it was even 3-4 years ago, as companies start to get more comfortable with the idea of settling these matters, seeing what happens with some of the mega cases that are out there, and really starting to think, how do we figure out how to settle these instead of fight these, because that money is coming away from product development and market development, and we believe, we being clients, the risk may be going down. If you move to the right, you'll see class actions. Now, if we looked at this chart, which we did on a webinar about 5 years ago, class actions was sitting right here in the lower left practice, and it was almost shrinking. And it has come completely full circle. One of the things that has happened with the recent cases and the case law is that plaintiffs have become convinced that they can and can be more forceful in bringing actions, and defense has pretty much decided that they can be more effective and more strategic in how they defend. Now, one of the impacts of all these rulings and decisions is that many more of the costs are front-end loaded. That is, the costs that clients incurred towards the middle or an end of a matter, they're now incurring more in the beginning. This is increasing the growth rate in class action. There are more companies today with class actions than there were last year and the year before. And many of the companies report that their exposures are growing as well. So this is turning out to be one of the more attractive areas in litigation, and companies, again, are looking to be strategic and spending money in the front end to figure out what the best approach or what the best way to handle these is, creating opportunities for law firms. Then finally, if I move over a little bit to the left, you'll see the regulatory practice. This continues to be a bull market. There are just no shortage of regulations. Now you've got the Affordable Care Act and so many different aspects, and you've also got, of course, lobbying to roll back some of the regulations. But companies are spending and are concerned and see the conflict and confluence of regulatory issues continuing to be one of the top issues that they face, and one of the areas where they spend tremendous amounts of money. Again, many of these matters tend to be smaller because they're counseling, their compliance, their strategies. However, oftentimes they will lead to litigation or other opportunities related to it. So some firms avoid it while others use it strategically to position themselves to future work and get a sense of where companies are headed to better understand their businesses and get some of the M&A work and the IP litigation that might be coming with that. Now, shifting tone a little bit, there's also substantial change in litigation and bet the company litigation. That big blue circle at the bottom there is the litigation market at about $20 billion a year, the biggest segment of the marketplace. And clients have just become dogmatic in not wanting to litigate. They are increasing their resolve to settle or dispose of matters. They have found spending money on litigation something that they just don't want to do. Same thing with bet the company litigation. There are so many examples. The most recent one was about a year and a half or 2 years ago when HSBC was confronted with very serious money laundering charges, which were considered bet the company issues, and the CEO was criticized in the front page of major newspapers for settling too quickly. But that is how risk-averse and how much companies want to settle litigation before ending up in some kind of extended trial or even a short trial. So litigation certainly is not going away. It's not as though the demand isn't there, but we talked about how corporate counsel are bringing former partners in-house, and they're using that expertise to figure out how to get better at early assessment, how to get better at figuring out how to settle matters. How do they work with their law firms to sit down and develop settlement processes? So from a demand standpoint, the demand is still there, but this is a classic case in dramatic change in client objectives which don't seem to be turning around. So the challenge in litigation is how do you show you're ready to settle, that you can triage matters with clients, yet you also can straddle that line between being able to settle and also being ready to go to court if you need to and develop those strategies. That is the dialogue that is going on, but it's focused on settling first as an option, settling second as an option, and then finally, what else can we do besides that? But we're not seeing, we're projecting about a 1 to 1.5% decline in overall spending based on what clients are telling us, with a little bit less of a decline in bet the company litigation. Now, we talked about how demand isn't going away. So if you look at the blue line, this is the total number of matters that clients tell us they either have had or reported over the last 4 years, going back to 2011. So you can see going into 2015 that clients expect 311 new matters, which is 8 matters more than they had in new matters in 2014, and you saw a dramatic increase from 2013 to 2014 in new matters. So when we said demand wasn't going away, we were not kidding. The demand is there, but this shows the tremendous commitment that clients have made to figuring out how to settle these matters. But not to be completely pessimistic, because you can see the litigation spending line is virtually flat. Every single new matter is a business development opportunity. The more you can discuss these new matters, the more you are in a position to discuss these new matters with your clients on an individual basis when they come in the door, not 4 weeks after, not 6 weeks after, not hoping that you're the law firm that your client calls. How do you get yourself at the table with your client as these new matters come in? How do you be the first person that helps assess and triage what these matters are about? That is the opportunity right now in litigation. If you can find a way to put yourself at the head of the line, see the matters, no matter how trivial, no matter how complex, and help your client allocate those out and put them in buckets of risk, of management, of spending, you will be positioned for the prime work that doesn't get settled and maybe the work that does get settled. But that is how the new marketing and business development and litigation in the most effective ways is being done. It's that one-on-one client conversation and ongoing conversation. We have a couple of law firm clients that are meeting with their clients monthly to discuss new matters and what to do with them and what the impacts are. And that is the kind of advantage, knowing what's coming first, that will enable you to get ahead of everybody else. Now, this is BTI's Opportunity Zone. We include this in our BTI Spending Outlook every year, and we try to take a look at about 16 or 17 different industry groups as well as the major practice groups. So if you look across the top, you'll see we start with cybersecurity, we move to class actions, M&A, regulatory, IP litigation, all the way across. The industries are listed up and down. Now, when we talk opportunity zone, this means that there is less price pressure and there is more demand. When we talk about the pressure point, the dark blue as you're looking at it, that is where there is particularly high rate pressure and particularly demanding aspects of doing this kind of work. The gray is what we would call market neutral, no particular standout in terms of rate. So if you're looking at this, many of our clients use this to help their business units or their practices develop individual business plans. But from a practice perspective, clearly cybersecurity, class actions are the big winners with the most number of orange squares. If you're looking by industry, high-tech, healthcare and high-tech are the clear winners with 6 and 9 of the opportunity zones collectively. After that, 7 and 9, excuse me, and then you'll have a few with 6 each. But you can use this to sit down and map out where to target those business development dollars, where the best opportunities are, so that you can get the most leverage for your business development time and money. Now, looking ahead, because no discussion about the marketplace would be complete without saying what's the next big practice? What haven't we thought about yet? And we spent the better part of the last 18 months trying to talk to corporate counsel as well as some law firms as to what will develop into new and substantial practice areas. If you look at this, they're in 4 categories. The upper right, basically the 2 axes, if you look at the bottom, that is a proxy for the opportunity. That's the annual number of matters you can expect. If you look at the left-hand side, this is the annual billings per matter. So if you're all the way to the right and all the way at the top, very high fees and a large number of matters. So if you look, for example, at cybersecurity all the way on the right, what you see is a large number of matters and above average annual billings per matter. If you look at white-collar crime, you'll see very high fees, but a relatively smaller number of matters. Now, if you look at each one of these, food will probably become even a bigger practice and move over to the right, perhaps a little bit more. But anything that you're looking at on this chart that is above the line is going to be a larger or higher billing item. Anything to the right is going to have more opportunities than those on the left. However, the ones on the left can offer tremendous opportunity with the right resources, focused marketing, and perhaps in combination with other practices. So if you look at this, we can see how to organize our resources, whether it be by industry, whether it be by issue in the marketplace in the case of genetically modified organisms, which will cross a number of industries, private company M&A, which will cross a number of industries. So it's really going to present kind of strategic questions for law firms as to how do I configure myself to take advantage of the opportunities I really want and the ones that are best suited for the way we do business. And then, it's going to be very difficult to pursue all of these in any one fell swoop. So we talked about the market side. What I'd like to do now is talk about the client opportunity. Capturing more work, protecting the client base, but that's all based on the premise that you're going to outperform competitors every single day. If you're not outperforming competitors, and I stress this, not over the long haul, every day, cumulatively, so that at the end of the year you were better every single day, not because of a result of something at the end of the year. It's a daily competition. As you all know, we go out and we ask corporate counsel who is best at client service, who is delivering the absolute best, who is best every single day at client service. There's about 650 law firms serving the Fortune 1000. 313 do not get recognized in any form, shape, or manner for client service. They're probably going to have a more difficult time than those on the left who do get honored in some form, shape, or manner. But the real advantage goes to the BTI Client Service 30, who perform 5 times better than every other single law firm. They are standing out on an individual basis. Now, as we evaluate these client service performances, we leave it solely up to clients. So these are the 17 activities clients use, and this comes from our research, to evaluate law firms' client service performance as well as their ongoing relationships. We don't have time today to go into all 17, but you have my promise that we will be having an in-depth webinar on the 17 activities coming up in the early June, late May timeframe. And as we look at this, all of the activities on here are important. The ones that have the most influence are in the upper right. That is commitment to help, understanding the client's business, client focus, and providing value for the dollar. Legal skills are in the price of admission. Tremendously important. As you can see, the bottom axis is the relative importance, and legal skills is the most important. However, they don't differentiate law firms in the mind of the client. What the client says is, I'm working with 36 law firms. One of them has the legal skills that I need, and if you don't have the legal skills, I won't work with you. It's not going to make you stand out. It's the activities in the upper right that make you stand out and make clients believe that you're delivering the superior client service. Now, after we ask the 300 corporate counsel, those 30 firms who perform 5 times better than all the other firms are in front of you. It's kind of an interesting group of firms. The first 4, Skadden, Jones Day, Sidley, Morgan Lewis, have been on the list 13 times. I'll take the short version and tell you that roughly 60% of the firms that are on here have been on here 7 years or more. We've been presenting the list for 14 years in total. You can see Skadden is number 1 for the 2nd year in a row. Jones Day is number 2, and continue its streak of never being below number 5. Morgan Lewis continues and has never been outside the BTI Client Service 30. Thompson Hine, which you'll now notice is a completely different type of firm than, say, a Jones Day or a Skadden, smaller firm by a factor of more than half, yet still ends up number 5 by investing heavily in client service, and in fact 2 years ago increased their investment in client service to improve its performance, and you can see it's all paying off. Now, we could go through each one of these firms, and I'm happy to take questions both offline or if you want to reach out some other way about specific firms. But you have high-rate firms, lower-rate firms, regional firms, international firms, domestic firms, smaller firms. The only reason you can't be on the BTI Client Service 30 is not delivering superior client service. Again, you have so many firms that have repeat performances year after year or every other year, and maybe they drop down to number 32 and 33. And what you find is that what these firms are doing is different from other firms. Just to talk briefly, one of the things you'll find is that they make outsized and specific commitments to improve client service on an ongoing basis. So every year they will add something to their client service program, whether it be training all the partners, whether it be client feedback, whether it be providing tools on how to provide or how to talk to clients about their business or information about their business, developing customized CLEs for their individual clients on a firm-wide basis instead of a partner-by-partner, client-by-client basis. Also, these firms are developing increased commitments to client service. Their budgets and investments in client service are actually increasing every year, as some firms are sitting back waiting for the market to recover. So you see that element of aggressiveness. You see that element of focus because they've stopped doing some business development activities to be able to focus more on client service, knowing that it's going to get them more business. So you see the kind of embodiment of this highly focused, aggressive, and defined approach. And not only that, but building on this approach to keep improving their performance. So our congratulations goes out to each of these 30 firms, and especially those that have managed to stay on year after year and repeat their performance in a market that has showed dramatic change over the last 14 years. Now, one question we always get from the skeptics here. So, Michael, if client service is everything, it can't be everything, or otherwise these 30 firms would get all the work, right? Well, there's still a big issue out there, and that is, one, law firms have to pursue and develop the work. If you have great client service, that's 80% of the formula, but if you're not developing the business, if you're not talking to your client in a way that lets them know you want the business and that you can deliver the business, that you're hungry, the work is not going to flow to you. And interestingly, clients see capacity issues. So in today's marketplace, and I can already see the large firms shaking their heads saying this can't be true, but clients see limited depth and breadth in the largest firms in the world, as well as regional firms, but it's not because there aren't the people there. 50% of corporate counsel said, I only know 2, 3 partners at a firm, and I just don't feel comfortable giving a new big matter to somebody I don't know or I haven't met. So what they do is they go to their next firm. Now, I have to emphasize, this is across the board. Large firms, mega firms, global firms, regional firms, boutiques. Not so much the boutiques, in all fairness. This is a big issue because if we're looking to grow, we know clients aren't increasing their budgets. To lose business because clients perceive we with 400, 500, 600, 700, pick your number, attorneys don't have depth, that is not a reason to lose business. Now, the ones that clients, they say their client focus lags others in declining value, they're in trouble. They're not going to get the business, but anybody who delivers excellent client service and their clients see depth and breadth, that is your license to get dramatically more business as you move ahead. So as we think about what we've talked about, I'd like to point out 6 trends we think matter the absolute most. Number 1, cybersecurity is, for lack of a better word, exploding. New dollars, a lot of headhunting for both clients and attorneys. There's an industry shakeup going on. This is the classic, how do we get the resources in place, because whoever does and can be aggressive in their business development is likely to stake out a leadership position. Number 2, in a bit of a surprise, the vice grip on outside counsel may be softening, even if just a bit. But in the independent research we've been doing in the last probably 10 to 12 weeks, and interestingly, we just completed a large-scale survey of global chief marketing officers at Fortune 1000 companies, as well as CFOs. All of them have talked about how business has gotten better and how they expect to engage in more activity, and they see themselves loosening up their budgets a little bit. So hopefully this is good news for everybody. The reason it's a trend that matters is if that happens, boy, I want to be the first in line to get that, because those are going to be the easiest dollars to get. They're going to be a lot easier than any of the other strategies that you might execute. The global companies we talked about, that foreign direct investment, that's going to add $1 billion to the marketplace. Think about that, $1 billion with a B. So if we're looking for places where there's new spending, there we go. Global companies. Food and agriculture companies are starting to get in the litigation hot seat. Right now, they're spending 3 times more than all other companies on litigation. We believe this is a trend. We believe this will continue and evolve into much larger cases, and you may remember they were squarely in the upper right-hand quadrant where there's larger cases and more of them on our practices of the future. Healthcare work and spending is soaring. Virtually every practice will reap the benefits, and sometimes in a very big way. Remember, they had more opportunity zones than everybody else. Finally, client expectations are sky high and climbing because all the new business activity, all the new demands, cybersecurity, pushing revenue forward, business demands, it's getting harder and harder to be able to stay ahead of what clients are demanding, especially since so many of them used to be where you all are. So they have less sympathy for those that can't figure out how to meet their expectations, to raise the performance levels, and really exceed those expectations, which is what it's going to take to be that #1 firm every single day. We'll leave you with 3 recommendations. First, I know when I'm talking to law firms, I hear a lot about the partners who don't want to introduce other partners to their clients. But at the same time, every firm has partners who will and want to and think it's a good idea. I would find those partners who will introduce one new partner, a partner who's in a meaningful practice to your top 25 clients, and then I would reward and over-celebrate the achievements that come out of that, because that is one of the most powerful ways to motivate everybody else in the firm. And this is designed specifically to deal with that limited depth and breadth issue that clients see across the board, 50% of all clients of all sizes. If we can overcome that, that is your ticket to new business. And if you celebrate it within the firm and publicly celebrate it. So to write an email from the managing partner to a partner is great for the partner but doesn't help the firm. Copy every partner in the firm every time there's a success like that, and you've got a way to change behavior. Number 2, craft a customized package of your firm's offerings from a single point of contact for the global companies based outside the United States. They're all interested in what we would call growth-oriented practices. So that's going to be things like private company M&A. It's going to be intellectual property. It's going to be regulatory issues. There's very little litigation. How do you package that up and market that to the foreign direct investment, the global companies investing in the U.S. in a way that's customized and designed to show you can help these organizations grow. I'm really surprised that more law firms haven't offered this, because this is the kind of thing that these companies tell us that they really look for. What's the package you can provide? Because they don't want to go to 5 different places. This would be a powerful offering in a market where there's going to be another $1 billion coming in. And then finally, take 30% of your BD budget and allocate it to no more than 2 growth opportunities. That's it, 2. Because to get growth in today's market requires more effort, requires more resources, requires more strategy, more tactics, more training, and then kill other less attractive opportunities so that you can be focused. Remember when we started out, the whole idea, the whole key to success is going to be aggressive, it's going to be defined, it's going to be focused, and taking highly effective, stronger, fewer actions to drive outside success and get results the size of which we probably have not seen before. With those thoughts, I would like to wish you the very best in the market ahead as you focus. If there's any questions, comments, thoughts, again, we welcome them by chat, by email, or call, and we will have copies out to you hopefully this afternoon, along with a survey that you can give us some feedback on the webinar, and we certainly enjoyed having you and look forward to your questions and comments. Thank you so much, and I wish you a good afternoon.